Hello, good afternoon. Welcome to Your Stocks, coming live from the CNBC-TV18 Motilal Oswal studios. I'm Vinny Motiwala. Thank you so much, as always, for tuning in. Surely a happy Friday that's coming in for the markets, because the Nifty is managing to hold on to gains of 0.6%, 25,976. That's where the Nifty is trading at. Day's highest point is what we're watching out for. 164 points uptick today for the Nifty 50. Let's look at the broader end of the market. What's happening over there? The Nifty mid-cap, that's also managing to hold on to gains of around 0.6%. We're seeing the Nifty small cap too is holding on to gains. So overall, we're seeing good performance that's coming in from the mid and small cap side as well. On that note, let's pull up the advance decline ratio today. Clearly in the favor of advances versus decline. So that is very positive, at least for the bulls. Seems like they're coming back. We'll keep an eye out on whether this sustains. That is the key factor. Now, the gap between the advance decline ratio is quite far off. There's no intersection that is coming in, or expected at least. But last 1.5 hours trade, we'll always be keeping an eye out on that as well. Banks doing well in today's trading session. So Nifty Bank is also up 0.4%. And IT, that's the one that's a bit muted, a dull day that you could say for the Nifty IT. Right now is trading almost flattish with slight bit of a negative bias. So let's keep an eye out on the IT pack going forward. But this is a show where we solve all your stock related queries, and we're going to be just doing that with our experts for today. Shahina Mukadam, independent market expert, as well as Mehul, Kothari, Deputy Vice President Technical Research at Anand, Rathi Shares and Stockbrokers, to answer all those stock queries. Mehul as well as Shahina, good afternoon. Thank you so much for joining us on the show. Let's get started with those queries. The first query for today, we have Rahul, who's writing to us from Surat. And this is an investment query that we're going to start off with. He's asking if he can buy 10 shares of CDSL at the current levels. Time period is 5 years, so long-term investor. Shahina, afternoon, and as a long-term investment story, CDSL, where do you see this playing out in the next 5 years? Should they look at buying at current levels, given capital market has been the trend or been the favorite for a while in the markets?
Good afternoon, Vinny. Good afternoon to your viewers and everybody on the show. And also, happy Friday to you also. So basically, CDSL is a long-term, I would say, holding story. You can add it to your long-term portfolio. And I would suggest he can buy, but stagger it over the next 6 months, because in terms of pure valuations, it's not cheap, you know. And also in terms of performance, if we saw the first half, we saw a bit of flattish in terms of revenues and some impact on profitability. Of course, the last year was on the numbers were a bit high. Because of that, on a comparative basis, the numbers looked a bit weak. But I believe, it has managed to maintain its 80% market share. And given the spate of IPOs that are taking place, as well as I think, it is likely to continue. Maybe not at the same pace, but it will continue over the next couple of months also, or quarters. So you keep adding to your portfolio, add it in phases.
Add it to your portfolio, add it in phases is the word on the fundamentals. Mehul, good afternoon. Thank you so much for joining us on the show. What is your thought on CDSL? Is it better to buy at this time, or should they wait out some bit more for a correction to come in before they start entering CDSL?
Well, good afternoon, Vinny. Thanks for having me on the show. Our stake also is positive on CDSL. The long-term outlook remains positive, supported by increasing market participation and higher transaction volumes. But on the technical front, short-term support is placed somewhere near to 1450 to 1400 zone, and currently it is quoting somewhere near to 1500. So as long as this support remains unbreached, we feel that the stock stays in a relatively safe zone, and above 1550, once it starts trading, then there could be a possibility of strong bounce in the counter, maybe towards 1650 or 1700. So yes, as of now, one can buy the stock, but if at all they want to keep a stop loss, then 1400 can be an ideal level.
Okay, so keep an eye out on those levels over there. Stop loss is also mentioned, but yes, long-term view for the stock is positive, both on the technicals and the fundamental front. Now, let's move on to the next query for today. This is a stock that is called Asian Energy. Now, it's not a stock that we normally talk about or track as well, but we have the query coming in from Gaurang, who's writing to us from Mumbai. He's holding 3,000 shares of Asian Energy. This is at a price of 126 rupees. He's making a profit on this one. Should he book his profit? Should he stay invested in this one? Shahina, what's your view for Asian Energy? It's a company with a market cap of 1,300 crores.
Yeah, so it's a small cap with volatile earnings. So I would, since he's making good amount of profit, I would suggest take half your profits, book half. Remaining half you can hold with a stop loss. Basically, I would believe that their numbers are going to be, volatile because they're impacted. Their government, largely government orders. They're into seismic surveys. So, if you saw the numbers after a very good 24, FY24, FY25, the first half has been pretty subdued. So I would say book half the profits. There is some bounce that is coming, but you can keep a stop loss and then try to capture or get in at lower levels or exit, take a call after a couple of months. But as of now, I would suggest half should be booked.
Half should be booked. At least that's the view coming in there from Shahina. Mehul, your view for Asian Energy, because given in the last 1 month, we've seen some bit of a downtick coming in for the stock. Is there any indication that one could see a further fall coming in? How should we judge it on the technicals?
When you see technically, we feel that after correcting from its peak from somewhere near to 390 to 400 odd zone, the stock appears to be preparing for a bounce as of now, because on the lower degree charts, if you see that, then it is highly oversold. So you may continue to hold the stock for a potential upside towards 320 to 350, because it is hinting towards a bounce where positions can be reviewed again, and then we can decide whether to exit half of the positions or not, because ultimately with the stock currently trading somewhere near to 300, the investment has delivered strong gains of 170 to 180%. So it's okay if one wants to book 50% also, but right now it is preparing for a bounce. So at that time, after a bounce, one can book 50%.
Okay, after a bounce, one can book 50%. That's a word on the technical front, but keep an eye out on those levels over there. Let's move on to the next query for today. We have Dushyant Patel, who's writing to us from Surat. He's holding 100 shares of Supreme Industries. Price is 3,490 rupees per share, so making some bit of a loss on this one. Now, he's asking whether to hold or sell at current levels. What's your view for Supreme Industries, Shahina?
I would suggest, since he's not making too much of a loss, it is, in my view, better to exit from Supreme Industries. We saw, while there is a small growth in revenues, the profits were weak. If you saw the last quarter, 20% down, and they are being hit by higher raw material costs. And I would believe that even if they were to grow by 12-15% over the, next couple of quarters in terms of revenue, I think profits are likely to be impacted by higher costs. So in my view, it's better to switch from Supreme Industries at current levels.
Better to switch from Supreme Industries at current levels. What is your view on this one, Mehul? What should the viewer do? Hold or just sell?
See, if we look at the daily oscillators like RSI and stochastic and MACD, stock appears a bit oversold on the daily chart, currently trading near 3350. We feel that a sustained move above 3400, because broader markets are participating now. So a move above 3400 could trigger a recovery, maybe towards 3700 or 3800 or maybe higher. So strategy would be, for trading perspective, continue to hold with a strict stop loss of 3150, because it seems that the trader has bought this share in near term only. So when the prices were somewhere near to 3500. So as of now, if it's a trading bet, then hold with a stop loss of 3150. Above 3400, once it start trading, then there could be a recovery towards 3800.
Okay. On that note, we are going to sip into a very short break, viewers. Don't go anywhere. We're going to come back with more of your stock-related queries. And at the top of the screens, you can see the phone number as well as the email address. So keep sending us your queries and we'll keep taking them with our experts as well. Welcome back to your stocks in CNBC-TV18. Let's keep it going with all those stock-related queries. The next query for today is come from Murtaza Lokhanwala, who's writing to us from Surat. He's saying that he has invested in shares of Polycab, M&M and Reliance. This was somewhere during COVID he bought it. Now he wants to know the outlook of these stocks for the long-term, next 3 to 5 year time period. Shahina, for these three stocks, what would your view be? They bought it during COVID, so I'm sure they're still making some money on this one. Should they continue to hold this for 3 to 5 years?
Yeah, see, he must be making good money actually on Polycab. There, in my view, the stock, it's not very expensive, but given the fact that over the next 3 to 5 years, the competition intensity in cables is likely to increase. So that, in my view, will cap, the profit increase that these guys can do, EBITDA improvement that they can have over the medium to longer term. So I would say of the three, I would prefer M&M and Reliance, which I believe over the next 2 to 3 years have more going for them. In terms of Reliance, of course, all the three verticals are doing well. Geo, we are expecting ARPUs to go up by about 10%, and they're already doing well. The listing is likely on the cards in a couple of quarters. You have retail, which is EBITDA positive and growing well. O2C business is also, I believe, if you look at a 3 year perspective, the growth in terms of the renewable energy is going to be pretty strong and drive the business over the next 3 years. So I would prefer a Reliance. M&M, of course, we've seen the stock having run up a lot. There could be some bit of consolidation, but they saw the November numbers, very strong growth, both in terms of tractors as well as in terms of their PVs. So I would believe that M&M over the next 3 years, the guidance of the management being pretty strong should also give you a decent return if you're holding it for the 3 to 5 year period. So I would prefer these two over Polycab as of today.
As of today, you would say hold M&M and Reliance and maybe book out profits out of Polycab then?
Partly book out profits,
Okay.
because you must be making a good amount of money
Yeah.
on that also.
Yes, true. Mehul, your view coming in. Polycab, M&M and Reliance, they have invested in this already, making profits here since they've invested since COVID. 3 to 5 year view.
When you see technically, all the three charts are looking really good, because if we ask fundamentally also, all three are somewhat kind of leaders in their respective field. If we talk about M&M and Reliance, they both have been outperformer. If we talk about from the Nifty 50 bunch of stocks, and they might continue to do well, because if Reliance has a great cup and handle formation, a breakout also is on the line, so it can do well. M&M also is on the verge of a breakout. It is trading near all-time high, so it might do well. Polycab has a lot to catch up, because recently it corrected from 8,000 odd levels. So we feel that there is a bounce in Polycab, which might be witnessed in a couple of weeks. So all the three stocks are hold as of now from technical perspective also.
Okay, all three are hold from the technical perspective also right now. Let's move on to the next query for today. This is coming from Manish Raju, who's writing to us from Chennai. It's an investment query asking, what is the best entry level for Tata Motors PV? Shahina, Tata Motors PV, is that something you're looking at right now?
Well, I think it is likely to do pretty well over the next 2 to 3 years. There also, if you saw the numbers, November numbers for their sales, PV sales was pretty strong actually. I would say that, yeah, the price of 350 is decent, but this is also one stock you should actually space yourself out and buy it over a period of time. Let the stock settle actually in terms of, since it's a, relisted recently, let it settle. In fact, both for CV as well as PV, the same recommendation holds. Let the stock settle, and then you could buy them with a 3 to 5 year view.
Okay, let them settle and then look to buy it with a 3 to 5 year view. Mehul, an entry level maybe that one should watch out for Tata Motors PV?
When you see currently Tata Motors is passenger vehicle is trading near 350 odd levels. Reversal candlestick pattern is visible on the weekly charts, indicating a potential turnaround from here on. The stock can be considered for buying with a trading stop loss of 320, which also coincides with the multi-year low. So we feel that this support might held from here on, and on the upside, the stock has the potential to bounce towards 380 to 390 in the medium term. So yes, one can enter the stock right now, but the stop loss should be 320.
Okay. Keep an eye out on those levels. A stop loss also, what Mehul has mentioned as well. Let's move on to the next query then. We have Mehul Shah, who's writing to us from Ahmedabad. He's holding 250 shares of Park Medi World at a price of 150 rupees. Obviously, this is one of those recent listings that have come in. So he wants to know if he should hold, exit at current levels. What should one do? Shahina?
Yeah, so I would say you can hold at current levels because of pure valuations. I think the listing price was pretty attractive. And given the fact that they've got 3,000 beds as in hospitals, it's largely in the North India, Haryana, and other parts of North India. In terms of valuations, if you look at it, EV to per bed, it's just about 2 crores, which in my view, compared to its performance and compared to the rest of the hospital groups, sector, it is reasonably priced. So I would suggest hold it for better returns. Though normally I don't like investing, at least for retail investors, investing, for new issues post listing, because the stocks remain very volatile for 6 months to 1 year. But I believe this stock could, I'm not expecting too much of downside from here.
Not expecting too much downside from here. Okay. Mehul, obviously, there's not much charts on this one. We'll go to the next query for you for this. We have the next query who's coming from Tanya on Sagility. They are from Tanay, I beg your pardon. I'm sorry. Tanay from New Delhi, who's writing to us on Sagility. He's holding 200 shares of Sagility. Price is 50 rupees per share. Wants to know the long-term view on this one. What should they be doing with Sagility? They bought it at 50 right now. It's at 52. Mehul?
Vinny, Sagility is a newly listed stock and both technical and fundamental indicators remain positive. In fact, the stock is also part of our technical Diwali picks. We expect an upside target of around 63 in medium term. Continue to hold the stock. For risk management, we feel a stop loss at 47 is advisable, as the stock has formed a double bottom formation over there. So yes, one can hold this stock with a stop loss of 47 if at all it's a trading bet, and one can hold also for a target of 63 and above.
Okay, surely we'll be keeping an eye out on those levels over there for Sagility. Shahina, what's your view for Sagility? Interesting healthcare service companies, and we've seen a lot of listings coming in this space in the last couple of years as well. Sagility as a play for the long term, would you suggest the viewer continue to hold it?
Yeah, so this is a little bit of a unique business in the pharma space, overall healthcare space. I would keep a very strict stop loss, as suggested, 47 rupees, because valuations are very expensive. Even considering that it's a good, platform stock, I would say, good IT stock, small cap to hold for the longer term. Valuations are expensive. Second point, management has 89% equity, and there is debt on the books, which is about 1,000 crores, which is largely management debt. So there is going to be some sort of restructuring happening over the next couple of months. So I would say keep that in mind, keep a stop loss.
Okay, keep that in mind. Keep a stop loss over there for Sagility. That's important over there, coming in from both our experts. On that note, Shahina as well as Mehul, thank you so much for joining us on the show and helping us answer all the stock-related queries. Hope you'll have a great weekend. See you all next week as well. But on that note, a quick check in terms of what the market is doing, right? We have seen when we started the show, it was at the day's highest point. Now also around those levels, 25,970, 980, around that mark is what the Nifty continues to trade at, still near those day's highest points. And obviously a lot of movers today we're seeing is coming in also from the banking side. Shriram Finance, that's the one we'll keep an eye out on given the big announcement that came in there. Ola Electric today is up 10% in the trading session. So keep an eye out on all these stocks as well. Tata Alexis, that is also up almost 8-9%. ITI, that's another one that's buzzing in trade. So we'll keep an eye out on all these names as well. But that is interesting to keep on your radar. Last 1 hour, what we've seen is Motherson Sumi. That has seen a big jump up as well, 2% uptick just in the last 1 hour. So watch out for that. But with that, we're absolutely out of time on this edition of Your Stocks. Thank you so much for tuning in. But remember, you can always email us your queries on the email address or the phone number on the screens for you all. We will address them with our experts. For the last hour of trade, now we have closing bell up next. Thank you so much.